Hello everyone, I am S.J. Jadhav from Sri Pancham Khemraj Mahavidyalaya, Sawantwadi. Today we are going to learn piecemeal distribution of cash. It is also known as order of payment on dissolution of a firm. Piece means part, installment. In dissolution of firm, we have seen the realization of assets and settlement of liabilities. But in practical, sale of all assets in a one day and pay off all liabilities is not possible. Practically what happens? We sell asset gradually and pay off liabilities when money is available. This approach of realization of asset and payment of liabilities is called piecemeal distribution of cash. Selling of all asset, there is no any logic. At the time of selling of asset, there is no any logic, but liabilities are logically paid. The realization of asset is part by part, it is gradual, it is piecemeal. After selling of assets, which liabilities is to be paid first, second, third, we will see in this module. Payments are made in parts, stages, pieces is known as piecemeal distribution of cash. This is the classification or types of liabilities. We can say dues. Liabilities are classified into three categories. First is the external liabilities. External liabilities further classified into two parts, preferential liabilities and other liabilities. Second is the internal liability, that is the loan from partners, and last is the capital accounts. Preferential creditors, preferential liabilities. This is called preferential because first preference, first priority is given before payment to other liabilities. Preferential creditors includes government dues such as income tax, municipal tax, sales tax, etc. Second preferential liability is employees' dues. It includes outstanding wages, outstanding salary, provident fund, workmen compensation, etc. In short, all dues related to employees is the employees' dues. Next is the realization expenses. Realization expenses is nothing but expenses incurred for sale of asset, that is statutory expenses, stamp duty, etc. Realization expenses are paid first. External liabilities, next part is the other liabilities, and other liabilities classified into two parts, secure liabilities and unsecured liabilities. That is also known as the secured creditors. Secured creditors means full amount of security is given at the time of taking loan from banks, from financial institutions. For example, amount of bank loan is rupees 1 lakh, and this 1 lakh taken after giving security of stock, and after sale of stock, if cash received, cash realized is rupees 1 lakh 30,000. It means loan amount is rupees 1 lakh and cash received after selling of stock is rupees 1 lakh 30,000. Sale amount 1 lakh 30,000 less loan amount 1 lakh, surplus amount realized is rupees 30,000. This is the example of secured creditors. Secured liability. Surplus amount of 30,000 is added back in cash and used for payment of unsecured creditors or other liabilities. In short, we can say amount of security is more than amount of loan taken, that is secured creditors. Unsecured creditors. Unsecured creditors means no security is given or mortgaged. For example, trade creditors, bills payable, these liabilities are never secured. यांना कुठच्याही प्रकारची सिक्युरिटी किंवा तारण दिलेली नसते, त्यांना आपण अनसिक्युअर्ड क्रेडिटर्स किंवा अनसिक्युअर्ड लायबिलिटीज असं म्हणतो. आफ्टर क्लिअरिंग ऑफ external outsiders liabilities, next priority given to internal liabilities, that is partners loan. If sufficient cash is available, then full amount can be given to partners loan. If available cash is not sufficient, then partners loan paid proportionately, or in ratio method partners loan is cleared. Partners loan is the internal liability of the firm. If cash available is not sufficient, partners loan is proportionately cleared. After clearing of all external and internal liabilities, next payment, that is the actually partners capital payment is made. If cash is available, partners capital should be paid. At the time of payment of partners capital, surplus, that is the excess capital method is used, and at the time of repayment of partners capital, first firm clear ultimate excess capital of partner, then excess capital of partner, and if cash is available, that cash distributed among all partners in their profit sharing ratio. Cash should be distributed among the partners in such a way that the balances unpaid on capital account would be in profit sharing ratio. This is the classification or types of liabilities. Next part is the order of payments. Payment means distribution of available cash among various claimants. Payment means distribution of cash among various claimants. First payment, payment of realization expenses. Realization expenses are paid first. Realization expenses incurred for sale of asset. For example, provision made for realization expenses is rupees 2,000 and actual realization expenses incurred is rupees 1,200. Means surplus provision, excess provision is made by rupees 800. That 800 is added back in available cash, and that total cash should be used for payment of liabilities. If actual expenses are more than the provision already made, the deficit should be deducted from cash received and the balance only be made available for payment. Means, for example, actual provision made for realization expenses is rupees 1200 and actual realization expenses incurred is rupees 2000. In this particular example, rupees 800 is the deficit amount and that deficit should be deducted from cash received and the balance used for payment. Next payment, second payment, payment of third party liabilities. That is the secured creditors, preferential creditors, unsecured creditors. And fourth is the contingent liabilities. Contingent liabilities means it depends upon happening of certain event. That is the contingent liability. It is not our actual liability of the firm. Cash equal to contingent liability should be set aside before making payment to other claimants. If contingent liability is occurred, payment is made. If the contingent liability is more than the amount set aside, then the balance of that liability should be paid out of the realization on that date. If contingent liability is occurred, then payment is made. If contingent liability is not occurred, that time payment is not made. Third payment, partner's loan. Partner's loan is the internal liability of the firm. And last payment, fourth payment, payment of partner's capital. For payment of partner's capital, excess capital method is used in this particular module. Distribution of cash among the partners. The distribution should be made in such a manner that the unpaid amount after distribution of all realizations is in profit sharing ratio. The balance left unpaid in capital accounts is a loss on realization, and if excess amount paid in capital accounts, that is called profit on realization. Loss on realization and profit on realization must be in profit sharing ratio. पिसमिल डिस्ट्रीब्युशन ऑफ कॅश हा आपला अत्यंत महत्वाचा टॉपिक आहे. तसा डिफिकल्ट नाही आहे. 12th मध्ये तुम्ही डिझोल्युशन ऑफ पार्टनरशिप स्टडी केलेला आहे टॉपिक. तर त्याच्या नंतरची जो पार्ट आहे तो आहे आपला piecemeal distribution of cash. After dissolution of a partnership firm, after selling of asset, जी आपल्याकडे कॅश फर्म मध्ये आलेली असते त्याच ती कॅश आपण आपल्या क्रेडिटर्सना पेमेंट करत असताना ज्यांच्या लायबिलिटीज आपल्याला पे करायचं आहे, ड्यूज पे करायचे आहेत, त्यांना कशा पद्धतीने पे करायचं ते आपल्याला या मॉड्यूल मध्ये स्टडी करायचं आहे. हा थेरॉटिकल पार्ट होता. जास्त थेरी नाही आहे या मॉड्यूल मध्ये. तर तुम्हाला ज्या पीडीएफ नोट्स दिलेल्या आहेत त्याचं रीडिंग करा. 12th मध्ये जो बेसिक अकाउंटचा आपण अभ्यास केलेला आहे त्याला थोडंसं त्याची रिव्हिजन करा आणि इथपर्यंतचा पार्ट तुम्ही चांगल्या पद्धतीनं मीनिंग समजून घेऊन अभ्यास करा. आणि आपण नेक्स्ट लेक्चरला आपण याच्या नंतरचा जो पार्ट आहे त्याचा आपण चांगल्या पद्धतीनं स्टडी करूया. सेल्फ स्टडीची सवय आपल्याला खूप महत्वाची आहे, जी आपल्या फ्युचरच्या दृष्टिकोनातून अत्यंत गरजेची सुद्धा आहे. त्याच्यामुळे तुम्ही हा पूर्ण पार्ट अभ्यास करा आणि त्याच्यानंतर आपण नेक्स्ट लेक्चरमध्ये आपण याच्या नंतरचा पार्ट काय करूया, कव्हर करूया. थँक्यू.